There was an Indian who, in 2009, traveled to the US, and this guy fell in love with an American girl. He wanted to propose to her, and she was in love with him as well. For some reason, the engagement did not happen. He broke up with her, or she broke up with him. And then he was left with a $1,600 ring. That's real expensive. But he didn't know what to do with it, and he just wanted to throw it in the trash. At the same time, a colleague at work came to him and said, "Let me give you 20,000 bitcoins that I own. They're very valuable." His friends at work warned him. They said, "This guy has been trying to get rid of his 20,000 bitcoins, which is worth nothing, for the last 6 months. Nobody will buy it from him. Do not buy the bitcoins from him." But this guy said, "I'm going to throw my wedding ring anyway. Why not give it to him so he can have it, make use of it, maybe give it to his girlfriend? I'll take whatever he gives. I don't need the 20,000 bitcoins. They're worth nothing, I know. But I'll just take it. Doesn't matter to me." Lo and behold, 9 years down the line, the 20,000 bitcoins that he just got it. He didn't want to keep it, but he just got it, and he thought it was worth nothing. It's now worth $180 million US dollars. In Indian rupees, that's 1,156 crore as of today's value. My friends, let me present the topic of cryptocurrencies. I'm sure everyone in the audience has heard one way or the other about bitcoins. Bitcoin is one of the examples of cryptocurrencies. Before we start, let me give you some famous words from around the globe. Bitcoin is a combination of a bubble, a Ponzi scheme, and an environmental disaster. It can get much worse than this. People either love Bitcoin or they hate it. Mostly you'll find haters, except the ones who've made some money out of it. Most of these tokens do not have real utility. Most of them are not different from others. In the long run, they think there's going to be only digital gold, one digital gold. So this person thinks, Barry Silbert from CoinDesk, he thinks that there is a place for cryptocurrencies in the world, but there's only place for one cryptocurrency. It's similar to only one gold, one commodity that rules the world. In terms of digital currencies, only Bitcoin can rule the world. So he's sort of optimistic, but not optimistic about all the cryptocurrencies. We'll go into details, a little bit further, but let me give you some famous words from around the globe. The price of Bitcoin is set to hit $100,000. One Bitcoin, mind you, that's about 65 lakh rupees as of today. In 2027, right now, if you don't know, it's worth about $8,000. This is not a fad. Cryptocurrencies are here to stay. There will emerge 2 to 3 main ones. Bitcoin will be one of those, says an analyst from A to Z Forex. Warren Buffett, the world famous investor, the world's biggest investor, the most famous one, says on cryptocurrencies that he can say with almost full certainty that they will come to a bad ending. If Warren Buffett himself, the god of investing, says that, who are we, mere mortals, to disagree with him, right? You never know. Times have changed, the world has changed. It's now the world of cryptocurrencies, blockchain, Bitcoin, Ethereum, and all of that. Let me give you a little bit of background on what all these buzzwords mean. A blockchain is a shared public ledger. Some of you here, I know it's an engineering college, but I know some of you may know about, something about accounting. When you have an accounting, you have a ledger, you have a debit, a credit. For example, you go to a shop, he gives you a commodity, you pay him money. So for you, it's a debit, for him, it's a credit, so on and so forth. So that's how it's been happening for hundreds of years, since man invented barter, then, mercantile, and then, the industrial age and all of that. And cut to today, you have blockchain, which is nothing but a shared public ledger secured by cryptography, by use of a public and private key attached to every message in the chain to verify its authenticity. So what happens, what's basically blockchain? Blockchain is nothing but, it's a series of messages which are crypted by a public and a private key. So for example, like I said before, you have a credit, a debit for each transaction, right? Each of these is a message that is crypted, that is secured by way of a public and a private key, which makes it extremely secure. When it comes to online transactions, all of us know that none of these transactions are secure. If someone takes your, steals your wallet, it's gone. I mean, anybody could use it. I mean, obviously you have an OTP system which is implemented here, but that's not implemented around the globe. Since the Indian, financial system is relatively new, you have an, it's fairly more secure and more sophisticated than even the United States, where I come from. So, although there are some ways in which you could secure your physical wallet, the digital wallet, which is basically enabled by the blockchain, is much, much more secure. I won't go into a lot of details, but I'm just giving you, sort of a high-level overview of what the blockchain is. Each blockchain is time-stamped. So if you have a transaction, if you want to, if you're Tom and if you want to send Harry $10 or 100 rupees, all you do is you log into your digital wallet, you initiate the transaction, and each transaction is secured by a public and a private key, and it's time-stamped, which means nobody can go in and change that timestamp. If someone tries to do that, if a hacker comes in and if he tries to change the timestamp, that change is only tracked in that one place. However, the entire transaction is broadcast to miners across the globe who verify the authenticity of this transaction. And when somebody finds that there is a breach in one place, because a hacker can at one time only change the key in one of the places, what happens? I mean, it's easily caught by the other miners, and then that fraudulent transaction is then negated. So digital wallet transactions are extremely secure. Cryptocurrency, as the name says, it's just currency. It's like Indian rupee, it's the US dollar. All of these are actual currencies which are traded around the world, and they are, world banks, governments are authorized by their central governments to trade in these various currencies. And then you have commodities like gold, silver, so on. However, cryptocurrency was a very new concept back about 10 years ago when it was introduced. It did not find many takers, due to which its price kept lagging until the last 2 years when the price really started going up. The most important concept about cryptocurrency that I want you to know is that it is decentralized. What happens when I have some, when I need 1,000 rupees from my bank account? I go to an ATM. Where does the money come to the ATM? It comes from the bank. Who prints the currency? The Reserve Bank. So the Reserve Bank is, the Reserve Bank and any world bank, depending on the currency in the country I go to, the money is printed by the central bank. The Treasury Department determines how much currency needs to be printed. The Reserve Bank prints it, distributes it across the country to different ATMs, to the banks who stock up their ATMs. The cryptocurrency is so what I just described is a central model. One central bank prints the currency. It's then distributed through through a variety of channels to the various banks. However, cryptocurrency is peer-to-peer. If I have a Bitcoin and I need to send it to you, it's only between you and me. And there are a few ways in which Bitcoins can be created, none of which involve a central bank, a government, or a regulator, which is completely different from how it works today. And the reason for that is that for the longest time, people behind the digital currency have been frustrated with how the world banks, the regulators hold a lot of power within them, and and they wanted to devise a way in which this power could be distributed, more power to the public. So this is what cryptocurrency does. It leverages the blockchain technology to create a virtual currency that is decentralized and only exists electronically. You may ask, okay, I have Paytm on my phone, I could use it. What's the key difference? The key difference is the Paytm is still dependent on money in your bank account. Cryptocurrency, such as Bitcoin, is completely different. It is its own currency. Just like your rupee, Bitcoin is its own currency. And you could buy things. I mean, there are not many traders across the world who will accept Bitcoin right now, but the situation is slowly changing. There are thousands and probably millions of investors right now who are investing in Bitcoins, and which is why the price of Bitcoin, I'll show you shortly, after this slide, has skyrocketed in the last 1 year. But before that, a few facts. Every cryptocurrency transaction is recorded on the blockchain. Like I mentioned before, every transaction on the blockchain is highly secure. So it tracks who has how many coins. If there are 1,000 Bitcoin investors, the network clearly knows who has how many coins and when the transaction occurred. Because like I said, there's a timestamp associated with every transaction, right? There are over 1,500 cryptocurrencies transacted in over 8,500 markets in the world. And that is only today, which is just about 10 years after the first cryptocurrency was introduced. Imagine what's going to happen in the next 10, 20 years. It's going to blow your mind. The market cap of all cryptocurrencies is over 420 billion, which is, I would say, still in its nascent phase. I mean, it's going to go into trillions in the next few years, provided the world regulators let that happen. But we'll see that in a little while. Bitcoin is the world's predominant cryptocurrency, whose market cap is about 148 billion, which puts it almost at 35% of the total market cap of all cryptocurrencies. And the majority of the 1,500 plus cryptocurrencies are expected to lose their value completely over time. That is a given. There are about less than 10 cryptocurrencies which are very popular. They're traded in large quantities. But then there are, like I said, over 1,500 of them, which even you and I can start a cryptocurrency. It's not a big deal. It's a matter of mining them. But majority of them are expected to lose their value. So if you're going to invest in cryptocurrencies, and if there is one thing I want you to learn from this session, it is do not invest in a cryptocurrency just because it is cheap. Just like a cheap stock, if you invest in a cheap cryptocurrency, you're going to lose money. I mean, it's a given. Except short term, you may gain some money, but long term, you're definitely going to lose their money on that. Okay. I know it's not very clear, but what I'm trying to say here is the top 10 cryptocurrency market capitalizations. Like I said before, Bitcoin, which is the world's predominant cryptocurrency, the market cap is about $148 billion. The price, like I said before, it's about $8,770 as of today, February 13th. The daily volume of the number of Bitcoins traded is about 16 million. If you have been following the financial markets, you would know that over the last 2 weeks, the markets have behaved in a very bearish manner. The markets have fallen pretty badly. Although last few days, it's made up a little bit of that fall. So Bitcoin's prices have also trended similar to stocks, except Bitcoin is much more volatile than stocks. Okay, this is. I'm sure this is the most interesting slide of them all. You see how this chart tracks the price of Bitcoin over the last 5 years. You see how it is, it has been stagnating around, for the longest time. And what I want you to focus is around 2016, the price was about $415. And July 2017, price started going up. Why did the price start going up? Nothing, just speculation. It's like A told B, hey, I invested in 1 Bitcoin and the price is expected to double, triple, go 10 times over the next 6 months. B buys it, B tells C tells D, and that's how the story spreads. Whether it's true or not, that's how speculation spreads, and that's how the price of stocks used to go up. That's exactly what's happened to Bitcoin as well. So from $415 in 2016, the price climbed to $19,500 in December, a couple of months ago. And that was the peak. And if you know anything about stocks, you would know that there are resistance at every price point, and 20,000 was the resistance price point. So Bitcoin did not touch that. It then started falling along with the rest of the global markets. The current price, like I said, is about $8,770. And it goes along with the story that I've been trying to tell you, which is that Bitcoin, along with the rest of the cryptocurrency market, is extremely volatile. And I would highly recommend do not spread any speculation, about Bitcoin, because even the world's major bank CEOs have no idea what Bitcoin is going to trend like in the next several years. Although several banks have started facilitating these transactions. Right now, like I said, none of the major banks facilitate any of the Bitcoin transactions. Everything happens via small private companies. Some companies went one of the companies went bankrupt because somebody stole a large number of Bitcoins. This was a few years ago when the transactions were not as secure. But now, things have become much more sophisticated. So Bitcoin transactions are much more secure than they were a few years ago. Okay. Philosophically speaking, what do you think is the root of all evil in the world? If I have, say, 1 crore rupees lying on the stage here, what am I going to do with it? Am I going to take it? Am I going to take it and then give it to the poor? Am I going to take it? Am I going to take it to the police? It's anybody's guess. It depends on what frame of mind I am in at that point in time. The point I'm trying to convey is that money is not the root of all evil. The root of all evil is greed, is the situation that every person is in. And that's what contributed to the price volatility of Bitcoin over the last couple of years. Nothing fundamentally changed. It's just that more people got to know about it, and when more people got to know, people start spreading the word, and then everybody starts buying, price goes up, and then more people start buying, and then the price goes up further. And at one point, everybody decides, oh my God, it's gone up so high, so I'm going to take some profits, I'm going to sell some, and when some people start selling, the price goes down, and then more people start selling, and then the price crashes. That's what happened in the last few weeks. So the most important thing is that as more and more people want to invest in Bitcoin and other cryptocurrencies, the most important need is that you have to understand the fundamentals behind how a cryptocurrency works. When you start understanding the fundamentals, you'll know that a cryptocurrency is just like any other currency. Do you see the price of Indian rupee fluctuating extremely in a volatile manner like the Bitcoin? Absolutely not. Why is this happening to Bitcoin? It's just because people treat it like a stock. Buy, sell, buy, sell, buy, sell. It doesn't work like that. It's a currency. A currency is meant to buy and trade things. It's not meant to, just trade, which is what is happening with Bitcoin. There are more transactions which are simply used for trading than actually buying things. So, that is a major problem with Bitcoin and the rest of the cryptocurrencies. Regulators have been cracking down on cryptocurrencies around the globe, leading to extreme price volatility. Let me take a local example. Supreme Court of India issued a notice on 13th November 2017 to RBI and related the financial ministries to create a regulatory mechanism with regard to Bitcoin. Right now, people in India invest in Bitcoin, but it doesn't fall under any regulatory mechanism. And the RBI has started taking notice of this. They're obviously aware that people in India are investing in Bitcoin, but there is no mechanism. You can buy, 10 Bitcoin worth $80,000. That's about 50 lakh rupees. Again, I'm not telling you should do this, but people with black money, shadow banking, what they can do is they can invest in Bitcoin, and eventually they can sell it and convert that to whatever currency you want and send it anywhere in the world. And that's obviously called money laundering. And that is a major issue with Bitcoin, which banks around the world are having a hard time dealing with, and which is why it is very imperative for regulators around the globe to come to terms with it as soon as possible, create some regulations around this, and make sure not everybody nobody in the world is able to, or at least in their jurisdiction in their country, is able to trade in Bitcoin anonymously. That's the most important thing. I mean, although there are, like I said, there are timestamps and there are records in the ledger for each transaction. Currently, governments do not know what's actually going on. Only people within the blockchain mechanism, the blockchain ecosystem, know what's going on. So that's pretty much the problem most governments in the world are trying to solve. Okay, so that was the problems with short-term volatility and the reasons behind them. Longer term, like I said before, longer term, the problem of using cryptocurrencies to finance illegal activities such as terrorism, cross-border financial crimes, money laundering, the risk is very extremely high. And the sooner world banks and regulators around the globe do something about it, create some regulatory mechanisms, it's going to be better for everybody around the world, because you don't want people trading bitcoins and primarily to finance illegal activities. There's been a lot of good work that's happened over the last few years, but then there are still many countries which want to ban Bitcoin purely because they're not able to track the movement of cryptocurrencies around the world. Taxes are a major problem with cryptocurrencies. Let me give an example in the US. About 7% of US investors are known to hold Bitcoin, but only 0.04% of those investors actually declare their transactions on their tax statements, on their tax returns. That's a major problem because since banks don't know what's going on, since central governments don't know what's going on, the IRS doesn't know what's going on, you get a free ride until they catch up. And the sooner they catch up, it's better for the world. Like I said before, world regulators are working on strictly regulating or banning cryptocurrencies altogether. So if you can't regulate something, what will you do? Just ban it, right? But that's not the solution. The solution is to create proper laws, proper regulations, to create a mechanism where people can legally trade in Bitcoin. They can be legally used to buy things and across the world. And if Bitcoin is used the way it's supposed to work, which is one currency for every person in the world, it will work beautifully. The problem is the regulations. The problem is people trying to use it for short-term speculation, try to make some money. That's not what it is for. If it is used the reason for which it's supposed to be used for, it's going to be it's going to do wonders for the world. It's going to like I said before, it's going to place the power in each citizen's hands rather than place the power in one central bank, which is what the governments want. But obviously, the popularity of the cryptocurrencies has led to a lot of investments. Even major banks have started investing in blockchain technology because they don't want to be left behind. When cryptocurrencies catch up maybe in 5 years and they become extremely popular and they're being used for, say, 20% of the transactions around the world, banks don't want to be left behind because then suddenly they will lose all the fees that they. So, for example, if you want to transfer, say, 1 crore to the US to your friend, right now you have to pay a fee. It's whether it's like a 3% premium, whatever it is. When you use cryptocurrency, when you use Bitcoin, there is nothing. You just buy Bitcoin, you transfer it to your friend, and that's it. Absolutely no fees. But eventually, when things start getting regularized, when the regulators step in, when there's an ecosystem created for regulators to step in, at that point we will see that there will be some fees involved, but it'll be nothing like what we pay today. It's going to be it's going to be a very beautiful world, but obviously there's a lot of hurdles to be crossed before we reach that stage. And Wall Street and banks, like I just said, they haven't fully embraced cryptocurrencies. They've started adapting. They've started allowing the trading of cryptocurrencies, but they cannot exert full control over these transactions. That's basically how blockchain is supposed to work. The control is not is there's no one person who can control the blockchain. It's a whole bunch of people who come together. They're called miners, who verify each transaction via algorithms, and eventually it'll lead to lower transaction fees, which the banks don't want, right? I mean, all banks want to make money as well, and so banks have not fully embraced blockchain technology as well as cryptocurrencies, but eventually they will have to, because otherwise they'll be left behind, and then it's okay to make some money rather than lose everything, right? So that's the logic behind that. Scalability. So right now there are a few thousand. I'm just throwing an example. There are a few thousand Bitcoin investors around the world, but long term, is the current technology sufficient? Not really. The blockchain technology can process about 3 transactions per second in Bitcoin. However, Visa, the world's one of the world's largest payment processors, processes about 2,000 transactions per second. So you can see there's a huge gap in scalability. So if blockchain has to be adopted globally, the scalability is a huge challenge. There are several strategies that are currently being proposed, and eventually I hope some of these will be adopted, and then Bitcoin can process many more transactions than it is able to process right now. So there are other smaller challenges as well, but these are the major challenges which cryptocurrencies are currently facing. And like I said, when I say cryptocurrencies, the majority of the market is owned by Bitcoin. So say 2, 3, 4, 5 years down the line, majority of these 1,500 plus currencies are going to lose their value. Bitcoin, along with a few other currencies, will be the only ones that are still holding value. And eventually, the world's major players expect that Bitcoin will be the only one which will be able to rival the US dollar and gold. That's all I have. So if there's anything that I want you to take away from this presentation, it is just that the term Bitcoin, the term cryptocurrency, blockchain, is all these fancy words have been are being thrown around, and I'm sure people want to learn about them. People with the intention that they want to trade them and make some money, but that should not be your only intention of getting into the Bitcoin world. I want you to learn the fundamentals of how a Bitcoin works, and then try to use it for the purpose for which it is meant to be used, which is actually transacting, sending money, buying things, and that is what will sustain cryptocurrencies in the long term. And if it is simply being used for trading, make some quick bucks, and then take my money out of it, it's not going to sustain. People are going to lose money eventually, because nothing that goes straight up, right? Everything that goes up has to fall down. And if you caught at the point where you bought at the peak, and the price falls down, nobody wants that, right? So that's the only thing. That's the number one thing I want you to take away from this presentation. So thank you very much.